Had, as Mike said, a lot of stocks that had to run up an awful lot, priced for perfection or whatever, but the stock market seemed ripe at that moment for something like this to hit it hard.
Yes, I mean, look, going into this, positioning was elevated. There's no questions about it. And then you basically had this headline risk coming from the virus, initially China, and then the outbreak sort of outside of China, Europe, and now some fear of potentially sort of hitting the US. And then coupled with that, I think also worth mentioning, we have sort of seen rising odds of potential progressive candidate going into Super Tuesday. So I think when you sort of couple both of those with elevated positioning and then the systematic selling that I was talking about, yes, you do get a relatively big move in the market in a fairly short period of time. But again, I right now would be probably looking at when do you start basically buying this dip.
Yeah. Dubravko, I know you got to run. Your few minutes were valuable. We appreciate you being with us. We'll talk to you again soon. That's Dubravko Lakos. Brenda Vingiello, what are you watching today?
Yeah, I think for longer-term investors, we just need to be careful not to get wrapped up in panic and to really take a step back and really look at what's happening here. I think it's a good thing to have a Goldman come out and say there's no earnings growth this year. Whether it's true or not, I think it's good to have that out there as a barometer. And I think for longer-term investors, we need to be able to look past the emotion of this market correction and really look at the opportunity that it could be providing.
So let's talk about a name like Microsoft. It seems to be the name of the day. Mike Santoli's talking about it. Kramer talked about it this morning, that it went up a little too much, that it was priced for perfection. Now it's gotten hit, one of the first big name marquee stocks to get hit.
It's not down enough.
He said he'd buy a little here.
It's not down enough. It's not. So over the last 2 days, I have been getting hit on buy limits. I talk about this strategy whenever we're in a correction. I've got buy limits, good till canceled, at ludicrously low prices on either names that I own that I want to own more lower or new names. They were going off like fireworks this morning. Got hit on Uber, almost got hit on Disney, came very close. Maybe that'll happen next week. This is the way that I like to buy stocks, but those levels are 20% plus from recent highs. Got hit on Shake Shack actually yesterday and today. So this is a strategy that relatively passive individuals at home could use. It's not quite what an institution would do, but with someone's own money, there are names that are down. I think the median stock right now is down about 13% from its high. The average S&P 500 name is down about 16 or 17% from its high. That sounds cheap, but we've actually seen way worse in prior corrections. So that is the way that I would approach this market if I were watching from home and wondering, is there something proactive that I can do that is the opposite of panic? Is there one smart thing to do? That is a smart thing to do. In the case of Microsoft, you're not quite there yet. I wouldn't say Microsoft's a fire sale. I think is it still up on the year or up since Thanksgiving?
I'll tell you what, the major averages are now out of correction because we're about 600.
Oh, so are we done here?
We're 600 at least points off the lows.